Adam, I've made you a panelist, and if you can unmute, welcome back
Right.
to Face. It's been way, 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 way too long, buddy. How are you?
I'm doing great. I'm doing great. Oh, I try to put the video on. I guess we're not doing video. Oh, start video.
No, you
Yeah,
can
you
start
can
the
do
Oh,
video.
video.
there we are.
Yours.
Okay.
All
Hi,
right.
everyone. All
All
right. Let's
right.
pop in
Hey,
now.
Adam. Great to see you. You look younger than ever, even with kids and everything, huh?
No,
How,
three little
how,
ones here, so we'll be running
how's
in
like?
here in a second.
Yeah, three now.
Yeah, they just keep
All
coming.
right, you're prolific. Okay, so let's kind of talk about what you might be seeing for April. I know you pay attention to the seasonals, and I think the last time I talked to you was at Trader Summit, Adam, and that was after the COVID crash. And I'm wondering if you were surprised the way energy prices came back, because I don't think that you thought back then, and not many, that we'd have this type of recovery in the energy complex. Am I correct? Is
Well,
my
on the
memory
contrary,
serving me?
on the
Huh?
contrary, I was very bearish on oil. I thought it would go negative, but also very bullish coming back. And I've actually been really hammering away at oil. If you want to start with oil.
Okay. Okay.
This is such a classic boom bust. I mean, every commodity really works the same way. Prices get too high, a ton of production comes on, which is what happened with U.S. shale, and then you have overproduction and prices collapse. And of course, the pandemic, compounded the whole cycle. But now you're at the point where there's no investment coming in. And
Yeah.
the timing from October to now, really almost doubling oil prices is a little bit, it's unpredictable, right? But
Right.
that investment is too low to meet demand. Plus, it's compounded by ESG, and environmental concerns and the lack of lending into the oil market. And really, demand will continue to grow or at least stay flat for the next decade. And you have traditional or conventional oil running off at 3% a year, OPEC staying very disciplined. And I'm extremely bullish on oil and oil companies.
Okay.
So
All
I
right.
think there's a huge inflationary trade there.
Okay, so there you go, the key word, inflationary, and most of the commodity complex has been responding, except for the yellow metal. And I'm wondering if you think this is going to set up a pretty good buying opportunity. Anything in April for precious metals that?
Yeah, it's not a great time. You really had that towards the end of the year, nice time for gold, and we kind of had that bump through year end again this year, so it worked once again. But I think it's a good time to be on the sidelines. If you want to touch on seasonals, I mean, people might have heard it by now, but it's really the best month for risk assets. April. The stock market over the last 20 years is by far the best month. And then if you break it down into FX, it's a very good month for cable, for oil, and for CAD. Are right up at the top there. Softish for the dollar index. And that's sort of and they're all very strong trends, like either the best or the second best month in all of those ones I just touched on. Uh,
Okay. So we've had a pretty good rally in the dollar. So April may be the pause to refresh, or do you think there's more left after maybe a period of weakness in April for the dollar on the upside?
Yeah, what a turn it's been, right? Since the start of the
Yeah.
year, everybody was bearish, the dollar
Yeah.
coming year. And it's such a classic thing where, everybody's bearish. And I did a Twitter survey yesterday on where do you think the 10-year will go next, 2% or 150? And it was like 70-30 to 2%, right? So everybody thinks yields going higher, which is by proxy dollar strength as well. And maybe, we get that little bit of a pullback and we do see 150 before two, but that's sort of hard to square if you think stocks are going to run away in the month. But there's certainly even flat in 10-year yields is almost negative for the dollar. If it is negative for the dollar, if we see risk assets do really well.
Yeah,
And I,
it's
and I
hard to
think
s- yeah, it's hard to see a big surge in the dollar happening for, I've heard targets in S&Ps anywhere from, 40.80, 41.40. I mean, we're really not that far away. Do you think that there's a lot higher than that, 40, say 4,200, before we see some type of correction? And there's so much to talk about. I mean, people are thinking it's a done deal that Biden's going to be able to raise taxes. And along with his infrastructure spend. What's another 3 trillion? Do you think that he's going to be able to, in a divided Congress, to raise taxes? Maybe.
Yeah, I mean, predicting politics has made a fool out of everyone the last long while.
Yeah,
But
yeah.
the you know
Tougher than predicting markets.
it sure is, and you get the politics right, and you might not get markets right anyway. But if I look at it, I think they got it through the first time. You must have a sense from the key congressmen that they can push this through, that they want to push this through. So, and then the tax increase, of course, it gets watered down, right? And then it's a question of, all right, how much of a corporate tax increase will it take to hurt the market? And that's a difficult one to answer because the rates that are, the posted rates aren't necessarily the paid rates for a lot of U.S. corporations, especially multinational corporations who can move those profits around. So, at $3 trillion in spending is undoubtedly bullish. And if you want to look outside the US, you can see the knock-ons. Really, since US yields broke out, or since almost the start of the year, the Canadian dollar has outperformed the US dollar. And I think there's going to be a lot of knock-on effects for the Mexican peso as well once the COVID, once they get around the bend on COVID, which is a ways off yet. But there's a lot to like there. But the flip side is Canada might have an election as well and raise taxes. So
How about Canada raising rates? I've spoken to people that think that they may be the first to move forward with tapering, and
yeah, that's priced in, and they overdid it, right? They started doing $5 billion a week in QE, and it was way too much. They went from zero to almost half the bond market, and they didn't. You get a stock and flow sort of argument about what matters, but I believe it's the flow, and now the flow has to stop because they went too hard too fast. And then you have just an insane housing market in Canada, which I also think is coming to the U.S. But
coming.
Well, I listen. You think it's crazy in America? It's another level here.
Okay. I mean, it's already like that. I mean, what you list your property, and you're going to be able to sell it above your list price, and people are having a hard time being able to buy houses because the competition is so intense for anything out there.
I believe it's still early innings in the U.S. I mean, you look at if you look at relative to even Canada, which our incomes are, maybe 30% lower than the U.S. It's almost double here. And if you take, kind of comparable cities, it's out of sight. And this spring, I think, is going to be insane. A lot of people think it's going to cool off, and then that filters back through, right, to spending. And everything else. But on the interest rate side, something has to be done. But I don't think the Bank of Canada wants to be the one on housing. So it becomes a real regulatory back and forth. But that, I'm not so concerned about. It's more on the tax side that, everybody's worried about rate hikes. I think the tightening is going to be fiscal not monetary tightening, but fiscal.
Interesting.
And, then it becomes execution, right? Because if it's just tax hikes on people making over $400,000, it's not really a factor for markets, right? You might get, if it's capital gains though, well, you're going to get a lot of selling before year end if people think capital gains hikes are coming in 2021, right? If they can stall it out until then. So it'll be interesting to see, but I think that's where your eye has to be. And Biden, it's an important speech today about what he says, but I think most of it's leaked already.
So did you in Canada have forbearance programs and renters moratoriums? And it's one of the strangest environments for a super boom in real estate I've ever seen, with a lot of people haven't been able to pay rent for a year, and people have been in forbearance for a year. Do you think that's going to have any effect? And do you have that up there in Canada? Or
we have similar programs, not as aggressive as the U.S. And I think it is worth watching that. And I think I'm coming around to the idea that the fraud in unemployment programs is way beyond what people think, and economists can't really model it in. But just the level of jobless claims have been so high over and over, and it's same here in Canada. And I think we're underestimating how much fraud is in there, and whether the government goes aggressively after that. Because that's all money that keeps circulating. Whether some of it might be saved, some of it might have been spent already. And then the same with rent. If people are saving the rent they didn't pay, there's kind of an argument for just not paying your rent and finding somewhere new if you want to live for free for a year. But otherwise, the opposite is you didn't pay your rent and you have no money, and now you're evicted. And how are you going to find somewhere else? And then you
Right.
have more housing on the market, which is your point. So it's very in flux. But I think that the portion of people that applies to is small enough, and the mania that's growing in housing is big enough to swamp it, to overwhelm it.
Okay. So, the mania, I guess the only thing that's going to ever stop the mania in real estate is going to be uh, maybe interest rates or a change in the tax code where maybe people don't get free capital gains on living in a house. I mean, there are housing shortages happening with this at the same time. So,
I don't
uh,
think capital gains can do it because you're really going to buy a house anyway. But it is what you said. Interest rates, right? Nobody looks at the price of a house anymore. They look at the price of the payments.
yeah, it's like a car. It's the way cars used to be, Adam.
And then it's supply. How much? I mean, America is the great builder of the world, and that is, the zoning laws are not as restrictive as somewhere like here. It depends. Everywhere is a little bit different, but in some places where Blake is in Arizona, they seem to be building like 10,000 houses a year. Whereas in other places, it's California, maybe it's very difficult. So, how fast they can do that, but you have shortages of labor now, shortages of supplies. Builders have, in some places, tremendous sways, like an oligopoly, right? In some places, because they own all the land, they release it slowly. So, and there's still the scars of the housing crisis in the US, but I just think it's going to be a tremendous tailwind for the next year, 2 years, 5 years, maybe. So long as the Fed keeps rates low. I think
Speaking of tailwinds and, in fact, hurricane force winds, what do you think of the last several months in crypto where it's really, the adoption phase started a while ago with PayPal accepting it and these prices in crypto, really amazing. It seems to be growing and, and accepted. And I just still can't wrap my head around it. What are you thinking here? What are you
I
telling
look at
people?
something like PayPal, and it's good headlines. We saw the pop yesterday, but if you've ever bought something in a foreign currency on PayPal, it's out of, like, the fees are incredible. Like, the spreads you'll get on a foreign currency transaction are awful,
Nothing. Yeah.
even compared
Right.
to and I weep to imagine what they might be on crypto. And then, but it more speaks to the psychology of the market, right? Good news is really goosing the market. And I think you just stay long until there's an ETF. An US ETF is coming, and it's going to be huge. And I think that probably takes Bitcoin to 100,000 and sets off sort of the final frenzy of this round. And I think it's just as simple as that. Stay long until at least, I don't know, a week after the ETF launches. And that
Okay.
might signify a top, which I expect to be. And once you start to get close to 100,000, I think it just acts like a magnet. And, we've held up pretty well in this consolidation, and it's probably ready to run again sometime soon.
Okay, so GBTC is a trust, not an ETF then. I always thought it was an ETF. Thanks for
Well,
educating me.
yeah, no, it's not as, I mean, we need something that's really almost one-to-one with no,
Okay,
miss. So they're coming.
okay. And anything that you see in the other commodity markets, we've had a huge run in grains. And, people talk about supply chain disruptions causing the inflation that you're talking about, like what we had temporarily in the Suez Canal. But, the Fed can't print corn or soybeans, and their weather markets. And, people say the Fed wants to get the inflation rate up to 2%. And I say go grocery shopping, you're there. What do you think about what's happening across the whole commodity spectrum? Is this, some people are talking about a super cycle in commodities? Adam, are
And
you buying into it?
I am. And I think there's, a lot of questions around, prices, it won't, some of these things won't last forever. Lumber's insane. Copper's I think there is a super cycle in copper, undoubtedly. But lumber's a more interesting one because there are a lot of trees out there and a lot of mills that are offline, and yet prices right now are at record highs. And, and if I believe in a housing boom, there'll be more of that. But that supply demand picture, it's a little bit beyond me in some of these things where you can bring on supply relatively quickly. Whereas a copper mine, it's 3 years, where oil, it's 3
Right.
years. But then the inflationary mindset, and I think that is coming, right? So you say it's home builders right now. They're saying, well, we got to boost prices $30,000 because of lumber. Sure. But when lumber comes back down, I don't think those price hikes are coming out. And I think that's the same in a lot of manufactured goods. Once you have risen prices and there isn't enough competitive dynamics in the market to pull it back down, I think they just get re-benchmarked higher. So, a lot of the talk right now is about this 2022 inflationary bust, right? So you get all these one-offs right now in 2021 and a huge spike in demand, and then it goes away in 2022, which is really what the Fed is saying. I don't think it does, because I think you realize you have a bit more pricing power than you thought, and I think they keep prices up even if some of the steam comes out of some of the commodities, or some of the supply chain issues are sorted. I just don't see them giving that back.
Yeah, then why not keep the margins, right? I mean, prices go up on a rocket ship and come down on a parachute, if they come down at all, right? So they keep that spread. The producers keep that spread when they're putting it out on the market. What do you think about China and what they're doing? A lot of people say that like what we're going to do in the U.S. is kind of socialism, and how could it succeed? But hasn't China been successful with, kind of a controlled grip on their whole society? And
well, that's the message at home, right? In China, it says, listen, we crushed it in this pandemic. We're growing. We see, massive politics everywhere else. And so they've really strengthened that national spirit. But what really is worrying me at the moment is I look at two charts, and one's Aussie dollar and the other's the Chinese stocks. And they're both this big head and shoulders in the Hang Seng or other, and they're down big. I mean, they bounced a little bit lately, although down again, mostly overnight. And I just I'm worried about that, right? Because you take two of the regions that did best against the coronavirus, and it would be China and Australia, New Zealand, right?
right.
And both of them are really, really soft right now. And I can't, Australian dollar is strong seasonally in September. I don't see a great reason to be short Aussie, maybe other than their own fight with China, which is getting pretty serious. They might halt iron ore imports from Australia, but in that whole picture, there are some, they're kind of out of the coronavirus, especially China, and it's not so strong there. And you ask people and you say, why is China so weak? And you can't really get even a coherent answer. There was some talk of tightening up, policy, deleveraging a little bit, but then they really unwound it. So it's not a real thing. And it's a bit scary on the global demand side there that China would be soft. And maybe that speaks to what happens in 2022 in the US. But I don't think that's the trade right now. Coming out of this is going to be the most euphoric time. You have ultra low rates, easiest fiscal policy, and the grand reopening. I mean, this summer it's pure euphoria in markets and on the ground. And I just think you got to ride that wave till August at least.
And why August? Do you think that some of the variants can create some doubt about the protection that vaccines are giving people?
No, not. I mean, I hope not. I hope that's obviously, but I think once, you get there's the anticipation of the boom and then the boom itself. The anticipation of the boom is almost better. It's like sometimes they say a vacation, the best part about vacation is anticipating the vacation. And then the vacation itself, it's nice, but that's
it's a journey, not the destination.
It keeps you going through work through, us in Canada, book one in February so you can get through January. And
right.
And so when the numbers start to come out in August, then you say, okay, July should be insane. It starts to flatten out somewhere around there and say, all right, people got to get back to normal. You can't go to a restaurant every night.
Right.
So then I think it's somewhere around there. You say, all right, let's take a bit back. And then I talk about capital gains later in the year. So there'd be some selling around that, just the general uncertainty. But I think that is the trade right now and coming into April is the best time to put it on. The amount of bearishness I see in a lot of things is surprising to me. So I think all these growth trades will do very well. And I think the market gets over this round of coronavirus pretty quickly, like it has every other round.
Okay, well, I'm a believer that currency, like the name of your company, has Forex in it, that it is the fulcrum for everything: bond markets, stock markets, commodity prices. And the big debate in the dollar is that right now, what we have, even if it weakens again in April, is that we have a bear market rally happening in the dollar that could take the Dixie back to, say, 96, 97. The euro maybe people have targets down around 115. More aggressive is down around 111, 78.6 back. Is that going to be the last best selling opportunity in the dollar after this bear market rally, or are we going to get a blow off in the dollar by some of the people who talk about the milkshake and emerging market debt, where it could really surprise everyone, and that would be deflationary for financial assets anyway?
I don't see it unfolding that way in any sense. I look at, okay, what's
Okay.
been the best? So the US bonds broke above 1.2%, 10 years.
Yeah.
February 16th, that was it was a gap higher, went up to 131 that day.
Yeah.
And since then, the worst
Good
performing,
memory.
I was writing about it yesterday. The worst performing currency in that time is the Swiss franc. It's down around 5%
Right.
US dollar.
Yeah.
And, carry is the ultimate kind of value of a currency. You get paid to hold US dollars right now, and you're paying to hold Swiss francs or euros. And so much of that flow and if yields continue to move higher in the US, even if it is on fiscal irresponsibility, it's still better than holding boons or Swiss debt or a lot of other things that are out there. So I think, it's speaking to the larger picture. Maybe, but I just don't think that's the trade right now. To worry about the dollar, inflation is much more likely, and unless the Fed really gets irresponsible, I don't think you create a negative feedback loop like the Turkish lira or something like that. So, I'm pretty upbeat on the dollar right now in general.
Okay.
I don't think for
Yeah.
this month that's necessarily the case, but the market's still pretty negative on US dollars until maybe you get vaccinations in emerging markets. And I think there's some money to come out of the US dollar there. But, if you're in Brazil right now, do you really want to be holding Brazilian real or US dollars? Like, it's getting bad.
Great point. Yeah.
And it's not the only place. And it's a long haul. You talk to people down there, they think, yeah, I might get the vaccine in a year. It's easy enough for me or you or most people listening, I suppose, to hold on and say, yes, I'm going to get it in 3 months or at most. Whereas, that's
Are you going to take it, Adam? I know it's a personal question. Are you going to get vaccinated?
I can't wait.
Okay.
I'll,
I'm there, buddy.
oh,
I've
good
had
for
my,
you. Yeah, I'm glad.
good for me. I'm 80 years older than you.
My
So,
sister-in-law is fighting with it for weeks here now, and it's not pretty.
all right. I don't do this often, but I have a question from one of our attendees. Adam, what are your thoughts on Canadian mortgage rates going up soon?
Well, I'll tell you what I did with mine, but mine was just refinance the whole thing. And I was going to write about this actually for mortgage website in Canada, and yes, I think they're going up, which is why I did it. You could get a 10. Canada works on 5-year rates, so in 5 years, I don't think they're going to be tremendously higher. But I was coming up to a refi anyway, and I hedged it with rate reset preferreds, which are bonds. Well, they're preferreds that ratchet up as rates move up, and they kind of move inversely to the rest of the bond market. So if rates move up, they go up a lot, and they have gone up a lot in anticipation of that. But yes, I think rates are going higher in Canada. That's a pretty easy
Okay.
call, I think,
Yeah.
over the 3 years.
Okay, so we haven't talked for a while. What's been going on at Forex Live? Any new features? Anything you want to tell the audience?
We're doing a lot of, trying to do some more educational stuff. Nothing new launched. We just providing live analysis every day on what's happening in the market, in the news, and just trying to make sense of the world. I've been writing about since the January 9th. I wrote a big piece arguing for US dollar strength when everyone was bearish. And that's the sort of stuff that we try to put out there, and some of it's ideas, some of it's just chatter, and trying to figure things out. I don't believe that everybody figures things out overnight, so it's really a
Right.
journey of talking to people like you and sharing ideas, and that's sort of, it's a bit of a stream of conscience sometimes, and it gets to where it needs to be, I find, a lot of times. So yeah, come check it out. And if you're wondering why the market's moving, it's usually the best place to find out why, especially if there's been a quick spike that just happened. So
Well,
yeah,
I've really missed talking to you, Adam, and this proves it. Sometimes you don't know what you have until haven't talked to someone for a while, and I'm not going to let this type of time lag happen ever again as long as I'm breathing. So I really appreciate you coming in, stepping up, and I'll get a hold of you, and I'd like to have you back in the regular rotation, and really appreciate your insights. And you're one of the best at what you do, Adam. Great respect from me, my trading warrior brothers. Thanks for your time today.
right back at you, Dale. It's always such a pleasure talking with you.
Eh, All right, my trading warrior brother, Adam Button. You can find him at Forex Live. Adam's one of the more insightful guys I know, and I could ask him anything, and he has an answer for me. And really great interview today, Adam. Good hunting, and I'll be in touch with you soon, partner.
Cheers, Dale.
Okay, everyone, that's a wrap. Remember, don't just count your pips, count your blessings. Glad you enjoyed the interview with Adam. Remember to join the team on Morning Edge in about 17 minutes. And that's a wrap for me. Good hunting, everyone, and see you tomorrow.